Good afternoon, and welcome to another edition of the CannaList Conversations. We are joined today by Scott Berman. Scott is the founder of the Panther Opportunity Fund, which then became or has spun out the Panther Group, and he'll explain what all that means. But before we go there, okay, I got a little notice yesterday on LinkedIn about you, and said that you were celebrating an anniversary. And it's not a cannabis anniversary, or at least I don't think it's a cannabis anniversary. 34 years doing what?
Doing statistics for the Philadelphia 76ers, official basketball stats.
And so what does that entail?
So basically we record everything that happens during the game: points, rebounds, turnovers, block shots, the whole thing. We record it for both teams. We print the box scores, we put the information out on the web. And so we just record every official stat that happens during a game.
And does this get you courtside seats? What's the benefit of this?
Well, you know what? It's funny. They used to be courtside seats for many, many years. And then they sold a bunch of seats to high rollers and they moved us into the stand. So we don't say courtside anymore, but we used to.
But you're still at the event. We're
still at every game. Yeah.
All right, that's cool. And what does that got to do with cannabis?
Nothing.
Yeah, there you go. Sorry. So moving on from there, my understanding from our brief conversation was that the Panther Opportunity Fund was the first vehicle and your entree into cannabis. Can you tell us a little bit about that?
Sure. So about 6 years ago or so, 2017 timeframe, we formed the Panther Opportunity Fund to invest in cannabis companies. It's deployed into about 17 different companies from that fund. And so we study the space very carefully. We're into a lot of different sectors. So we invest heavily into the ancillary side, but also in plant touching. We're now on our third fund, which is the Panther Micro Fund. And so, we kind of look at deals and we fund these companies and try and help them grow and eventually exit.
So is this a private equity fund, or is this a group of angels who have come together and, syndicate an investment?
It's a classic venture fund model.
Okay.
We have about 75 limited partners in the fund. So we have a bunch of high net worth individuals that have put capital in to our fund, and then we allocate it into different deals. And then, we help them along the way.
And what is your basic criteria when you're looking at an investment?
So the first thing is, a company that has some traction. We typically don't do pre-revenue deals. So we like to see $1 million or a couple million in revenue. So they've proven something. We like to see market share for whatever category that they're in, because there's competition in every category. Certainly looking at the leadership is really important. What have they done in their past careers? Are they coachable? Are they, forward thinking and have vision? Are they good with capital, like, managing money? So that's it. Also, like geographically, like where are they operating and what is the status of that market that they're in? Can they grow into new markets? And those are some of the key things that we look at.
So this is primarily expansion capital, right? Allow them to sort of grow. Okay.
Yes, growth capital.
And how is the fund turned into the group?
Yeah, so over the first couple of years of the fund, we were getting brought in to do a bunch of things to help the companies grow. We serve on the board of about half of the companies. We were being asked to help with marketing and advertising, which is my background. My partner's a finance expert. He was helping with CFO duties, things like that. And so we decided that, there was a lot of companies that needed help after the fundraising came through. I mean, everybody needs money to grow their company, but there's a lot of other things that we decided we can do to help them get to the next stage. So we spun off the Panther Group to provide services for these companies to help them get from A round to B round, from B round to exit or going public and things like that.
So you guys entered the space, you said around 2017, is that about right?
I actually got into it in 2014 when I was with my previous company. We had a digital advertising agency that specialized in politics and healthcare. And I got involved in marijuana politics in 2014. And I started to see changes happening state by state. And that's when I got into the space. A couple years later, I decided to invest, and that's when I got into the fund. But I had been studying it since 14, actually.
But I mean, it's safe to say that 2017, this was a very optimistic market. We could even call it a green rush. And the market has changed quite dramatically since 2017. What does
Yeah.
that mean for a fund when the market is sort of making those kind of swings?
There's good news and bad news. I'd say that the challenge is that things are moving slower than expected. So some of the companies that we invested in 17 and 18, we thought they would be a little bit further along than they are now. A lot of headwinds have happened in the industry. We haven't had a lot on the federal side as far as legislation goes. So that's been a challenge. On the other hand, some of these companies are doing really well. The markets that have, strong medical programs or adult use programs the numbers are great. A lot of cannabis is being sold every single day. And so there's a lot of good news within the portfolio. But in general, on a macro trend, the space has sort of been up and down since then.
And do you anticipate consolidation, M&A activity? What do you think is going to happen in the next couple of years?
Absolutely. I definitely can. A lot of M&A activity. We see it happening now. We see bigger players coming in and putting together the multi-state operators that are buying up retail in different places. We see that some of the tech companies trying to combine forces. I think what you see is, and it happens a lot in emerging industries where there's a lot of players. For instance, like in the point of sale avenue of cannabis, there's 30, 40, I don't even know how many different people trying to break into that.
Yeah.
It's not, long term, that's not going to work out. There's going to be mergers and there's going to be combinations. And unfortunately, there's also a lot of distressed assets out there. And so a lot of companies are going to be forced to merge with others to survive.
It's interesting on the federal level, and like you said, the lack of movement it's one of those, be careful what you ask for, right? Because there's a certain amount of state protectionism as a result of the lack of federal, right?
Yes.
Do you see that in your portfolio companies?
Yes, absolutely. Some of the portfolio companies are only in one or two states, and they have not monopolies, but they have a really good advantage because they have a big footprint in that state. When it opens up more and other players, and growing is a good example. So cultivation, as you know, has to be done in state. You can't grow it and ship it out of state. If they allow that at some point, we'd see a lot more cannabis coming in from like Oregon and California and states like Michigan and even the East Coast. They wouldn't be really able to grow it at the same price. And so they would be challenged by interstate commerce. Yeah,
absolutely. We've seen a lot of folks that have done well because of that sort of protectionism. I was living in Barcelona for a while. And when I went to my local dispensary, they're like, we have California product. Like, even like in Spain, they're talking about California product. I mean? So, those states, once the federal does open up, then they're going to be competing, like you said, with California, Oregon, that produce product and can do it, at scale and things like that. Are you guys primarily East Coast focused, or where is your?
No, we're more West Coast focused than right now. Most of the deals, the bigger deals that we have been on the West Coast because that's where the adult use markets have been. And so we started looking out in, Colorado and Oregon, many years ago. Things are now moving to the East Coast, which I'm really happy about. I reside in Philadelphia. So it's just like, it's good that these businesses are coming here. And I think in the next couple of years, the Northeast is going to be big for cannabis, for all types of cannabis companies.
Yeah, I mean, we expect New York to be a big market, you know what I mean? New Jersey is a weird market, but you can only get flower and, you have to drive 2 hours just to get flower.
That's changing quickly.
Okay.
New Jersey's going to be New Jersey's being like overlooked a little bit because of New York. Things are happening in Jersey, albeit very slowly, but there's a lot of licenses being given out, awarded in Jersey. And there's going to be probably 100 to 200 retail stores opening in the next year to two. And maybe 50 to 75 cultivators. So I think in about 2 years from now, New Jersey is going to be a very strong market. You also have New York and Connecticut, which are coming alive at the same time.
And how have your companies dealt with, when we hear of markets coming, online, most of the audience thinks that means they're going to be live next month. And I think New York's a really great example of no, we're talking
Yeah.
years.
Yes.
How does that impact your companies?
It's not good. It's not helpful. No, it's not, in fact, and specifically in Jersey, I have several projects that are sitting around that I think will be really good, but we're just waiting for the state to move faster. And so you have to anticipate the time. And, another good example is like, the money being raised for these deals, like you have to have extra money to bridge yourself until your revenue really starts to kick in. Right. So, there's growers that are raising millions of dollars. They're going to need that because it's going to take them a year and a half to build their facility and get distribution and things like that. But there are also other sectors which are going to be good right away. Like I think there's a big opportunity for brands on the East Coast that can really get into all these new stores, and they could do well very quickly with a lot less competition than they have out West.
And have we've had that discussion numerous times about brands, and I always make the argument that people aren't buying brands yet, that they're still buying experience. They go to the bud tender and they're like, I want to feel like this. I want the most THC. I want to be able to sleep. I want anxiety. Are we early in the life cycle when it comes to brands, or where are we with that?
We're definitely early. And again, it depends on the evolution of the particular market. So if you go to Oregon, for example, there's a lot of brands now that are well known and that are doing very well there. If you come out to the other markets, it's based on what you said. It's just about the experience. So I think that the more shoppers that have access to the more products, like different form factors, that's when brand loyalty is built. And over time, I compare it to the liquor industry. You go into the liquor store and you look for, tequila, vodka, you kind of recognize most of the brands. And I think that's where cannabis is headed, but it's going to take, it takes a couple years of adult use for that to really take hold in most of these markets.
And I think the other factor, and I know that we saw this in Spain, was consistency, right? Because we would find something, whether it was a brand or not, and then the next time we went, it wasn't available. So, in California, like I buy the same thing every time.
Yeah.
I mean, I don't care, like, give me that. It's
Right.
a brand, I know it, I like it, and I know what it will do, but that it's always available. So, I think especially in the emerging markets, until we have consistency of those types of products, that, we need that for the brands to begin to take hold.
Totally agree with that. Yeah. There's also form factors, that, you have obviously flower is one category, but then, there's a lot of new categories that people don't even have access to. Like here in Pennsylvania, they don't allow edibles at all. And so I think that at some point they flip that switch and there'll be a lot more people with gummy bears and mints and etc. drinks coming into this market. So that's also, it affects the brand penetration in different states.
So as an investor, and there is this uncertainty of federalization, but are you concerned that federalization will open the floodgates to big players and eliminate these smaller businesses?
No, I'm not concerned. I hope it happens because I think that's when we will experience exits.
Okay.
I think that a lot of our companies would be good acquisition targets. I think there's a bunch of companies. I know that there's companies out there that are looking at this space that are just waiting for federal legalization, and then they're going to come in and buy up, existing players.
Yeah,
so
we see tobacco, we see alcohol. Farmers obviously got an interest. Those types of folks will all be interested once it's available at the federal level.
Yes.
So shifting topics a little bit, I know that you're involved with Athletes for Care.
Yes.
Tell me a little bit what that is and what does that entail?
Sure. It's a really great organization. They're a nonprofit that helps former professional athletes deal with lots of issues post-career. So, there's this misconception that every athlete, retires with tons of money and is in great shape for the rest of his life. That's not true. And they also have a lot of injuries. So one of the founders of it is a really great guy named Riley Cote. He was a Philadelphia Flyer hockey player. He had a lot of concussions during his career, and he figured out that using hemp, CBD, and cannabis was really good for him during those days, but he couldn't tell anybody about it because he would have gotten booted out of the league. and he retired and had a lot of issues physically. And so he dedicated himself to, he created this thing called the Hemp Heals Foundation. And he just decided to bring in other athletes and say, you can use these products to help you with your injuries, could be brain injuries, could be physical injuries, and then there's also just generally like dealing with, these folks, men and women, like up until they retire, sports is their entire life, and then they get out and they're in the mid 30s or younger, and they really need to figure out what to do next. And so Athletes for Care helps them with business opportunities, with medical advice, and just, dealing with all the issues that come after their career's over.
So where is this located?
It started in Philadelphia. It's there's athletes all around the country and probably around the world. There's a couple hundred athletes involved, and there's a lot of different sports too. There's former football and baseball and hockey and basketball and swimming and stuff, like Olympic athletes. And so there's really a lot of really good people in it, and it's a great cause, and we'd love to get more support for it.
And if people want to learn more, where can they find it?
athletesforcare.org. Yep.
So I know that you have a background in digital marketing. So let's sort of go down that path, especially as it relates to cannabis. There's a lot of things as, cannabis businesses we can't do. And how does that impact our ability to grow, especially from a marketing perspective?
The typical small business spends probably 75% of their marketing on Google and Facebook. Those two places are not allowing cannabis of any kind for advertising. So they have to find other ways of marketing their products. And, what I try and focus on is data-driven marketing tactics. How do we find audiences in different places without using Google and without using Facebook ads? And so it's tricky and it's hard because most people don't have a team in-house that could manage and direct the advertising, because they can't use those two engines. So we have to find other ways around that, and we have, but it's definitely not an easy task.
And when you look at a platform like Weed Maps, like, is that a good thing or a bad thing?
It's a good thing for the most part. I mean, they have a lot of traffic. I wouldn't recommend, a lot of people spend all of their budget on Weed Maps. I would not recommend that. But I would say in a marketing mix, it has its place. Back in the early days of cannabis, they did a really good job of listing dispensaries. And like, if you weren't on Weed Maps, you would just get, your traffic would go way down. And so they were like a spigot, for companies to really get business in the door. Nowadays, it's not the same. And I would say there's other things that are good to be used out there, but it still has a big audience, and there's a lot of people looking at it every day.
I was kind of amazed. I went to visit a new dispensary the other day, and these are young guys and obviously new to the business, and I'm looking at their packaging and I'm like, you guys can't do that, because it was cartoons,
right?
And I'm like, and the guy's like, what do you mean? And I'm like, you can't by any means have any sort of association with, like you're targeting, kids, teens, what have you. Why is that messaging not clear to folks who are entering the market?
I just think that's a great question. They're just not paying attention to the compliance factors. They're trying to just make a cool product, and they don't think about it, honestly, and they really need to. Part of what we do is try and find compliant advertising, and it's different in every state. So if you're, there's different rules in every state. So you have to understand what each state has for the regulations, but to me, that's obvious, but to a lot of people, they're just trying to make cool packaging. And, a lot of these people might have been selling on the illicit market, and that packaging worked really well.
Yeah, I mean, this was his own design, so obviously he was a little taken back. And, I mean, I think his intent was in the right place, but just not having that perspective of, this is not going to fly. This is going to get you in trouble.
Yeah. Well, so we're in favor of regulations. We like regulated market. I mean, we used to run this advertising. It would be regulate marijuana like alcohol, right? And so there's a lot of rules on selling alcohol to minors or not, obviously. And there's
try not to sell it to minors.
Right. No, I mean,
Yeah.
there's rules
Scott's
on
on
what
record. Sell it to minors. Go ahead.
I'm on record to say I may have had a drink before I was 21, but I'm way past that, so we're all good. But yeah, I mean, there's rules on it, and we like the rules. We like regulation. We like lab testing, for example, and packaging rules and things like that, because a regulated market, is much better for business owners, really.
But the challenge with the regulated market compared to the illicit market or the legacy market, depending on what you want to call it, is compliance costs money.
Yes.
Right? So how do we compete with the legacy market because we are trying to be compliant?
It's a great question, and also taxes, are a big deal, obviously, in the regulated market, and I think that's part of it. The taxes need to come down, and because otherwise, it costs a lot more to buy in the store. But look, it's a long. We've had a lot of years, like 30, 40 more years of people buying weed illegally, and having it pretty easy. It's pretty easy to get cannabis. California weed, for example, shows up in Barcelona. It shows up in Philadelphia too, right? So it's been easy for us to get weed illegally. The transition to the regulated market is going to take a long time. And, but that's where these rules come in. They need to incentivize businesses and business owners to do it legitimately so they can make profits and have everything regulated.
So in our pre-discussion, you sort of opened the door a little bit to politics. So I have a couple of political questions for you. Okay.
Sure.
So Biden makes this big move. He, pardons these folks. What does this mean? Is this anything real? I mean, it only affected maybe what, 6,500 people. We're seeing the red states in particular push back, say, no, we're not going to do this.
Yeah.
We've not yet seen any move. He's sort of made suggestions about classification and that, but nothing's moved. Is this simply a pre-midterm move with no bite?
I think it was mostly a midterm move, mostly about the midterms. It's a very popular issue. The timing was definitely deliberate based on the midterms. However, it does have, it is a change in the stance of the federal government, and that's a positive thing. I think the pardons are a great thing, and no one should be in jail for cannabis. I'm a huge advocate of that. But I do think the bigger issue is the de or rescheduling of the drug, as a Schedule I drug. That has a potential to change almost everything that we're dealing with day to day. He said in his announcement that he's already directed his who's a Health and Human Services, I think, to investigate this right away. And to the extent that they are doing it quickly, it'll be huge, but we don't know when that's going to happen. That particular one, Schedule I classification, affects us in so many different ways. So I'm optimistic that that'll change things, and then we'll be, it'll be a new future. But we can't count on Biden to do a whole lot, really, at this point. I mean, he's a veteran of the drug wars of the 70s and 80s, and I think he reluctantly made that announcement, unfortunately.
Yeah, because he's never been a supporter in the past, and he's
No.
never moved that along. Like I said, maybe more of a midterm play than anything else.
It's a very popular issue. 71%, I think, of Americans believe that marijuana should be legalized, at least in medical or adult use. And I think that, I'm upset that more politicians don't take that up and talk about it more openly, because the ones that do get votes from it. I mean, it's clearly a very popular issue. It's also one of the few issues that's not as much red and blue separated. It is more, it's one of the least partisan issues out there. There's plenty of reasons why Republicans support legal cannabis too. So to me, it's more of an old versus young issue. If you're a politician over, like, say, 70 years old, you're going to have a certain view of cannabis. If you're under, that age, you don't care anymore.
That's most of Congress, isn't it?
Yes, and that's. But you know what? The good news is that every 2 years, we're about to have another midterm. There's going to be younger people taking over. There's older people that are retired. There's 5 states that have it on the ballot for adult use. So every 2 years of an election cycle, we do make a leap forward.
What's interesting is you talked about the older versus younger, but the older crowd, I think they're changing the face of cannabis use, right? Because the older crowd, they're not trying to get high, right? They're doing pain management. They're,
Yes.
things like that. They're looking at it as a wellness product, as a medicinal product. They're not the bros going to the store and give me the biggest THC you can do. So
Yeah.
I think hopefully that they will vote and consistent with the realization that this benefits them, even if they are older.
There's no question about it. And one thing that we've seen is every 2 years, marijuana gets a bigger share of the vote. So, in certain states, it passes, like in Florida, I think it was 14, like it missed by a little bit and then it passed by a lot, medical, in Arizona, the same thing happened. And so I think that, you're right. Older folks are realizing that it's not a bad thing. Senior citizens are a really growing segment for cannabis. And, I think that the more education, we need education, first of all, we need clinical research. We need more doctors saying, I think cannabis is better for you than Ambien for sleep, for example, and better than opioids for pain. And I think the more that this gets into our medical community, the more you're going to see the seniors like trying it and voting for it.
Yeah, I mean, and that getting into the medical community is a difficulty, right? Because
Yes.
That means clinical trials, that means years of
Yes.
Data in order, because the medical community is not going to prescribe this unless there's evidence that this has efficacy.
Yes.
So unfortunately, we're numerous years away from seeing it. We're starting to see it, and selectively, right? We've seen it in epilepsy, we've seen it in a couple other places, but that's a long-term play because it's going to take a while.
Yeah.
Going back to sort of the politics a little bit, historically, some of the bigger industries have opposed legalization because it competes with their products.
Yes.
Tobacco, alcohol. Are these industries shifting because now they see it as an opportunity rather than a competition?
I think it's a subtle shift, and I think it's behind the scenes. Pharma is another example. I think that pharma definitely feels threatened by cannabis, and there's a lot of lobbying that goes against it. But I think that they see the inevitability of it. And like we were saying earlier, I think they're going to look at it as we can actually make money in this space, eventually, and we can't fight it anymore. So I think it's subtle, but it's behind the scenes. And I also think they're waiting for federal legalization. They're making so much money that they don't want to threaten their existing businesses. So they don't, we've been approached by alcohol companies that want to buy into this space. And they're like, we can't do it yet because we have business all over the country. As soon as it's federally legal, we'll come in and we'll acquire these companies. So I think privately, they really are in favor of it, but publicly they're not.
Yeah, I mean, we've worked with a farmer in the past, and they're very, cognizant of their portfolio and what might potentially compete with something that's in their portfolio. And if it's a superior product, they're going to buy it, to have it in their portfolio.
It's also safer than a lot of their products. I mean, when you look at alcohol, tobacco,
that's not their motivator.
No, I know. You're right. They're not, they don't, yes, you're right. But I mean, they have to realize that at some level, they understand that smoking a joint is better than smoking a cigarette, and so I think that, but I also think that their bankers are against it too, in other ways. So funding these deals is harder because, a lot of the big, investment banks that work with these companies are not in favor of it either.
Why?
It's because it's federally illegal and they're worried about their other businesses.
Yeah, I was gonna say, is it federally illegal that's driving it, or are they protecting some of their existing portfolios?
I think it's both. Yeah, I think they're protecting their portfolios too. And I think, getting back to the scheduling of it, I think that would also unleash a lot more capital too, because they wouldn't worry about it as much. Same thing with safe banking. The banking law that's been floating around Congress for years. I mean, that would change, a lot of their outlook on it. So I think they'd be more willing to work with the cannabis industry if they had the federal cover to do so.
I mean, I think the big piece is the rescheduling, right? Because that would eliminate 280E, which is making it, unprofitable at this point for just about everybody. Nobody's making money. Very few people.
280E and the banking laws are the two biggest things that could propel the industry forward. And I think there's a good chance we're going to get the banking thing fixed within maybe the next year or so. 280, I'm not so sure. It really is hard to say, but That would have a really big impact on a lot of the profitability. From an investor standpoint, the valuations would go up immediately if you eliminate 280E, because that income drops right to the bottom line.
Are you seeing a change in the types of businesses that you're being asked to look at? For instance, rather than just simply a grower or distributor, we're looking at businesses that are combining cannabis with other experiences or other types, so that it's more than a one-trick pony, right? That cannabis is being incorporated in other elements of business or other types of business.
Absolutely. It's fascinating, actually. I mean, we probably looked at 1,000 pitch decks in the last couple of years, and there's a hotel that's like 420, friendly hotels. And then there's lounges, and then there's cannabinoid medicine being, molecules of cannabis being incorporated into other medicine, and even skincare. And, there's one of the companies we invested in does terpene formulations, and then they're working in the alcohol space too. So they're actually infusing beer with terpenes. So there's a lot of really interesting crossover. There's certainly a lot in the tech space, and I think that's what's really interesting from the venture side, is how many different angles there are. And it's so new that you can launch businesses in different ways and be successful.
But can you be profitable?
Great question. Some of them can, some of them cannot. I think there's a dream. Everyone's got a dream, and then it hits with the reality of what's happening in the space today. There's certainly some really good profitable companies, but there's also a lot of people struggling too.
When you're looking at an investment, how do you weigh the idea versus the serial entrepreneur aspect?
It's a great question. Really, it's looking a couple years into the future and saying, that's the big thing, is like, where is this business and how are they going to succeed and compete? There's competition in every single sector. So sometimes people will come to me and say, I got this awesome idea for cannabis business. I'm like, someone probably already has that idea. What makes your company better than the other 6 people that are doing it?
Yeah.
So, you have to have the right funding, the right investors, the right leadership, and you have to have a vision for where the space is going. I'll give you one example of that, in that, a multi-state operator that's operating medical dispensaries, but they're in states that are probably going to flip to adult use. That's a founding group that has vision. They say, we're going to dominate the medical market here, but we also are going to lobby to get adult use passed, and we think that there's a good chance it will
and they'll
pass.
have an existing footprint as a result.
Yeah, and you'll immediately flip all your stores from medical to adult use. So that's a good example. And then you also have companies that are operating in different, not just in cannabis. So, there's tech companies that we're involved with, a lab testing company that makes a diagnostic kit for testing cannabis. Well, when COVID hit, they created a diagnostic test for COVID, and they got a grant from the federal government. So they were able to pivot into another vertical. The cannabis business is doing really well, and so is their COVID business. So, we look for companies that are actually able to do more than one thing.
So you said you looked at 1,000 pitch decks, right? What makes you cringe?
I like that question a lot.
Yeah, because we look at them all the time, and it's just like you look at them, you're like, oh God. But give us your input.
One thing that makes me cringe is from year 3 to 4, we're going to quadruple our sales. We're going to start off. Yeah, the first year is going to be tough. We're going to do 600,000. By year 3, we're going to be at 18 million. That makes me cringe. That almost never happens. The other thing that I don't like is when I look at the pitch deck, is when 3/4 of the pitch deck is how big the cannabis industry is going to be. And the total, I already know that it's going to be big. I don't need to see 6 pages on, the addressable market. We know it's going to be good. I like to see a lot of detail on the numbers. I like to see the team and the advisors. I certainly look at that page a lot. So I think the good decks are the ones that talk about who's behind this company, and also a competitive landscape. A lot of these companies don't consider that there's a lot of competition. And so the decks that have that in there look better to me.
Yeah, I mean, our sort of take on the no competition is, either you're freaking brilliant and come up with this really good idea, or you have no idea what's going on in the market. And it's probably a much better chance it's the latter one.
Yeah, and you also have, right, you have to consider that, and you also have to consider where you're operating too. So getting back to the politics, like where are you going to operate your business, in which markets, and how are you going to grow into other markets? That's also a big factor. So if someone's just focused on, I'm going to do this in Michigan, great. What about year 3 and 4? Are you only going to do that in Michigan, or are you going to move to other states?
Yeah, I got to say my favorite sort of pitch deck faux pas is we only need X% of the market to be successful.
Yeah.
With no explanation as to why they would command that.
Yeah. I also don't, I like to see an exit scenario. So when a company talks about we're going to grow, I'm like, okay, as an investor, I want to see that you have a vision towards an exit at some point. You don't have to have it all figured out today, but you have to have a clear indication that at some point we're going to have a return on our equity capital.
Yeah, because you're not doing a share of the profits, right? So
no,
that's not what an investor does.
We're looking for exits almost every single time.
And when you look at an investment, the typical private equity, is I want a 10x return. You're not going to get it on every deal, but so is that your perspective of like, is this a 10x opportunity, or how do you look at it?
I'd say we're hoping for 5 to 8x a lot of the time. There's definitely going to be some home runs that are 10 plus, but we're definitely looking for at least 5x on our investment most of the time.
But if it's not there, you're not,
No, and there's a lot of deals that look good, but we don't think there's going to be a big exit. We think they can build a nice company and make good money for themselves, but we don't think there's going to be a big, who's going to buy this company for $80 million? That there's a lot of companies that have a pretty high valuation because of something they've achieved right now, but they've also are very unrealistic about who can buy them for a good multiple.
And as an investor, you guys are getting in early, right?
A lot of the time, yes.
And then are there subsequent rounds, and are you guys helping with the subsequent rounds?
Yeah, we like doing that. Actually, we like backing our winners. We like follow-on rounds, and we reserve capital for that. And like I said earlier, like when you prove something over time, we also like to see people that have projections and come somewhere near them. Like when you look back and said, we're going to do X amount of revenue in 2022, and they're right on track. That's a really good sign. We're going to raise more money and go bigger in 23. Okay, we'll back you with more capital. Unfortunately, the other scenario happens all too often where the original projections are really out of whack, and they don't meet those expectations.
Yeah, our experience is when the projections are like that they don't really understand their numbers.
Right.
And that, once you start to ask them, 1 or 2 questions about the numbers, and if the CEO is like, "Oh, I'm going to have to ask the CFO," I'm like, "No, wrong answer."
Yeah.
You see a lot. I don't care that your projections are wrong, because they are. But I want to know that you understand cost to acquire. I want to know that you know what lifetime value looks like. So that you understand the underlying metrics to your numbers and whether or not they're feasible.
We also take a close look at the data room and look at things like the corporate structure. What does the cap table look like? How many warrants have they issued? What are the board? Who's on the board of directors? What's the payroll and the outlook for full-time employees and things like that. So there's a lot of those factors that go into growth. One of the things that I cringe at is a lack of a marketing budget. Coming from the marketing side, it's like we're going to go from 600,000 to 18 million, and we have 100 grand for marketing. Like, how's that going to work? And we also, salespeople. What's your team building plan as you get into year 2, 3, 4? A lot of these companies are 5 people or less when they start. But they want to get to this certain level. You're going to need a lot bigger team, and you need to put that in your projections.
What's interesting is we've looked at a lot of deals, and our typical response is, I'm sure this is a cool idea, but have you taken anything to market? Have you, give me a reason why I can believe you're the team to execute that.
Yeah.
I've seen a lot of great ideas. Not all of them have turned into good businesses. You know what I mean? It's the ability to execute.
It's the ability to execute. And I look at how do you keep customers? This is something I look at every time, is what is your attrition rate?
Mm.
of, you're going to sign up like, 50 new customers a year. How many of them are going to keep on and stay with you and pay you every month for your services or buy your weed, or buy your brand? And if you get to a good level where you're adding customers and you're keeping old ones, that's a really good sign, because you've proven something, you're executing, and people are making money off of working with you.
Yeah, I mean,
if you're
it's tremendously expensive to find that new customer, right? So you got to
yes.
keep the ones you have.
Yes. You got to keep it, and they have to be profitable, based on buying, like if you're a dispensary and you're buying a brand and people are buying, and this coming in the store and saying, I want that brand, and you're reordering more and more every month, that's a really good sign. But, the industry is so new that people sign up for things. This happens a lot in the software side of it, where people will sign up for a software platform and then they'll dump it after a couple months because they don't get value out of it. And so we look for that traction that customers stay with you. You also have to have good service to your customers and good salespeople out there talking to them all the time.
You mentioned about looking at the cap table, right? And one of the, unfortunately, the sins of early startups is they have a tendency to give away equity to consultants and all that kind of stuff. So when have they given away too much equity? Like what kind of, how much founder equity do you want to see remaining in the company before you come in?
It's a great question. I would say it's different in every situation. We'd like to see like 50% of the company still owned by the original founders. That's, at some point, and also if they have employee stock options too, like are they rewarding key employees and keeping them on with stock? That's a good sign. But, as you said, that sometimes they give away too much of it and they ended up diluting themselves, and they end up leaving the company, as a result.
And speaking of that, most founders are not CEOs, right? They're really good at launching companies. So how do you deal with that transition? Because they don't usually want to give that up.
Yeah, I mean, it's a tricky situation. And this is also something we look for: people that are coachable, that don't have huge egos, about themselves running the company. When we serve on the board and we're, key investors, we'll make recommendations about, you need to move aside and put a new CEO in, or a lot of times it's like the CFO as well that needs to be upgraded and things like that. But, it's really hard, especially in the first couple of years of a business. The founders are usually, running the whole show.
And what forms of alternative capital do they look to, leverage your investment with?
There's a lot of debt coming into the space now.
Mm-hmm.
A lot of debt based on real estate, on receivables, on things like that. And I think that it's been harder to get equity investors. So I think a lot of them are turning to debt, and also that helps with the cap table too, because the first round, they gave up a bunch of equity. Now they're on round two, and they want to grow a lot, and they don't want to give up more equity, and so they raise debt instead. So that's becoming more popular.
And so, how long will the fund go? Where do you think things are going to go in the future? What are we looking at going forward?
Well, look, I'm an optimistic guy. I think that there's things are going to change, and a lot of these companies are going to have exits. The second fund that we've done is more focused on later stage companies that are between A and B rounds, or Bs and exits potentially. So we do feel like the next 3 to 5 years, there's going to be a lot of companies that have a good event, a liquidity event. I certainly think it's a factor of politics again. But even if things don't change, we invest based on what's happening today, and can they be successful if nothing changes? If things change, it's going to happen faster, and I'll be happy.
And I know that you guys are in the Northeast, and that's an emerging market. What are some of the new other markets that are opening up that you guys are excited about?
Well, Maryland is one. Maryland is going to be hopefully flipping next week to adult use. We mentioned New York, New Jersey. There's, Missouri, Arkansas. They both have it on the ballot. I think their Midwest states are exciting. Even West Virginia, North and South Dakota have it on the ballot now too. So some of those states that are less competitive are very interesting to us, because there's still a lot of volume there. There's just not as many people trying to get in there. Florida, I'm sorry. Florida is also a very good market, very good medical market. And I think there's a good shot that they'll flip in 24 to adult use.
Yeah, I mean, you would think the seniors would make that happen, right?
Yeah. Yeah. I would hope so.
Scott, we very much appreciate your time today. We appreciate your insights. Again, if folks want to learn more about you, where should they find you?
You can certainly find me on LinkedIn. I'm on there every day. The website for Panther is panthergroup.co. And, you can find me on Twitter as well, or at most of the trade shows. I like to travel a lot.
Scott, again, thank you very much for your time. We appreciate it. And we look forward to checking in with you in a couple months.
Hey, thanks a lot for this opportunity. I really enjoyed the conversation. Thank you.